Well, one of our national pastimes has increasingly become making housing more affordable, and the government at many levels have been doing their part. Our next guest says these are great first steps, but there's still a couple more things that could be done. Benjamin Tal, Deputy Chief Economist at CIBC, is joining us now. Benny, thanks as always for joining us. First, let's take stock of the changes, the moves that have been made to cut red tape, to make it more affordable for a certain subsect of the market that finds housing out of reach. Have these been needle movers when you put it all together?
Well, they are needed. We have to, continue to do things because it's not enough. I think that at all levels, if it's at the city level, provincial level, national level, every politician knows that the next election will be about housing and affordability. And therefore, there is a sense of urgency to do something to ease the pressure, because quite frankly, we are in a crisis when it comes to affordability. The slowdown in the housing market over the past 6 months will not even dent the affordability crisis that we are witnessing now. And it will get worse if we don't do something. Now, I know that it's very difficult to fix because it's a supply issue, but I think that the move to put a cap on the number of foreign students and non-permanent residents is a significant move in the right direction, a huge move in the right direction. It will actually slow down population growth from about 3% to 1%, which is the long-term average. I think it's the right thing to do, and then we have to work on the supply story, and we're starting to move in the right direction here.
What more can be done?
A lot. But
what specifically?
Slowly.
I know you have 2 specific measures that you'd like to see implemented.
Yes. First of all, I would like to see something that is dealing with the treatment of capital gain on commercial real estate. What I mean by that is the following. In the US, they have something called 1031 exchange. This means that if you are buying a commercial real estate asset, like a residential building, and then you sell it, the profit is not taxed if you take the profit and invest it in another commercial real estate asset. So no tax whatsoever. In Canada,
and we don't have that here in Canada.
No, we don't. We are taxed immediately. So I'm saying let's copy the US and implement this kind of a 1031 exchange in Canada. All kinds of studies done in the US suggest that it's not only helping the supply of housing and rental housing that we need like oxygen, but also it's helping the economy as a whole, and it's actually working to increase government revenue at the end of the day. So I think that's a no-brainer. I think we should start moving on that very, very quickly. In the US, it's working beautifully, and I don't see any reason why not to do it in Canada, and it will not be costly at all. The opposite is the case.
Well, I'd like to understand more about how it does add to revenue, especially this coming after a capital gains tax inclusion rate was actually expanded.
Exactly, but I think that it will increase economic activity overall. It will increase real estate activity overall, because if you are taxed on the profit, regardless what you do with the money, you have no motivation to do so and buy another one. If you have 1031 exchange, there is a domino effect. The real estate market is much more dynamic, creating more revenues and therefore revenues for the government.
You also talk about, there was this push to incentivize people to have maybe a suite of their home that someone else could live in, and to create kind of a loan program for that. Is there more that can be done for this idea of a secondary rental suite?
Yes, I think that's one of the big solutions that people don't talk about. You go to Vancouver and more so in Toronto, and you ask people, how can you afford this? Can you afford this house? It's crazy. We know your income. How can you afford this house? And they say, well, we have a tenant. We have a tenant. We have a tenant. In Vancouver, almost everybody has a tenant if you live in a detached house. Now, the point that I'm making, and many others are starting to make this point, is that why don't we build a house that is designed for renting? Namely, you have a family living in the house that bought the house, but there is a unit in this house that is designed for renting that unit as part of the structure of the house. Because the way it works now, you buy a house, you have a basement that is not finished, you try to finish it a little bit here and there, and then you get a tenant. It's not really built for a tenant. It's not even safe. Sometimes it's not according to code. The noise cancellation is not there, so everybody can hear everybody. It's not optimal. So why don't we build units that are designed for that, that there will be so many wins. There will be one win for the homeowners because you get extra income, which is significant. The other win is for the renter because it will be below market rent. You can get this unit for much lower than market rent. The environment will win because you get less, the environmental footprint of this house will be half of a normal house. If you're buying the number of tenants. And safety is definitely another win. So I really think this is a direction that we have to look at. So I think that providing incentives to developers to build these kind of houses will be something smart to do.
Let's talk, zoom out a little bit and maybe relate it to the conversation that we're having. But on rate cuts, I mean, that's got to be a factor here as well in terms of how it will affect people's behavior as it relates to housing. How do you think that first rate cut will affect, if at all, behavior?
Well, I think it will. I think that if you look at what happened in the spring of 2023, the Bank of Canada was hinting about the possibility of not raising again. Of course, they did raise at the end of the day. But when they were talking about it, the market went crazy. The spring of 2023 was very strong. And I think that one thing that the Bank of Canada is fearing at this point, that this crazy real estate market will take off again when they start cutting. This will not be a reason not to cut interest rates because the Bank of Canada cannot control the housing market. That's not its job. Its job is inflation. And if the economy is in a per capita recession, inflation is moving in the right direction, they have to cut, but there is a risk that the real estate market will take off, especially the detached segment of the market.